Let's take a look at your market news now. Asian stocks saw gains on Monday morning as US and Chinese officials in Beijing geared up for crunch trade talks aimed at averting fresh tariff escalations. Mainland Chinese markets reopened higher after the week-long Lunar New Year break, despite a series of bearish global growth forecasts, with investor focus squarely on efforts to tackle the trade row. Now, top US economic officials will travel to the Chinese capital this week for the third round of talks on Thursday and Friday, but deputies had already arrived and the White House said preparatory discussions were due to begin on Monday. It was a good day at the market for Asia as the Hang Seng was lifted 0.6% to 28,110 points, while the Shanghai Composite picked up 1.4%, rising to 2,653 points. Tokyo's Nikkei remains closed for public holiday. US stocks ended near flat on Friday as skepticism over the United States and China reaching a trade deal before that looming deadline added concerns over slowing global growth. The Dow Jones Industrial was 0.25% cheaper at close of 25,105 points, while the S&P 500 picked up marginally to close at 2,707 points. The Nasdaq Composite added over 0.1% to close out at 7,298 points. While South Africa's real estate investment trust suffered a difficult year in 2018, this is set to continue as investors in the resilient group of companies await a probe into the firm. The company is being investigated by the Financial Sector Conduct Authority for share price manipulation and insider trading. The regulator will extend its price manipulation probe for another 6 months, with the insider trading matter closer to completion. Now, this has sparked further uncertainty in the share price, with Resilient losing 51% in 10 months. Now, having investigated the sector since March 2018, the FCSA added Nepi Rockcastle and Lighthouse Capital to the probe in July. The listed property sector suffered a more than 120 billion rand loss last year, with Resilient losing over half of its value. Let's take a closer look at your market news now. We'll go over to Arabile Gumede at the Johannesburg Stock Exchange. Arabile, a little bit of a mixed picture behind you.
Yeah, it is a bit of a mixed one when you take a look just behind you, but overall, the market is on the up. The likes of British American Tobacco, the likes of Naspers are doing really well. You've just spoken about Resilient, and it doesn't seem that there'll be too much resilience hanging out for that company there, and a lot of hurt coming through. We'll unpack a whole lot of that as well in just a moment or two. Of course, the global markets as well have been circumspect as well, but flowing through from Asia seems to have brought some sense of positivity across the board as well. Let's unpack exactly what those numbers look like, and we'll analyze it in just a bit. That market picture now, as you can take a look there, of course, doing fairly positive across the globe, really, and not just on the local front there. So let's chat to Bright Khumalo from Vestact Asset Management. Bright, thank you so much for the time, but sense of positivity coming through from the market today, filtering through from that Asian trade, and it seems like that Lunar New Year is bringing a fresh burst to the market as well locally.
Of course, it's the year of the pig, so, you know, we came here to have the bacon, I guess. Yeah, but, you know, there's still a lot of, you know, uncertainty with regards to the trade deal. I think that's what's hinging on the market in big way, especially US markets. This is between China and the US, obviously, so we still don't know because everything just been postponed and postponed and postponed, and the markets are, you know, are not feeling very stable currently because the last print that we saw in terms of US jobs numbers was so high that no one expected it to be that high. So everything, you know, is starting to settle, and investors are very skeptical at this point, is all I can say.
It was almost twice the number expected by the Americans there on that front, over 300,000 jobs created there. So it's absolutely massive on that front. If you take a look at the likes of Naspers, who continue to see those relative gains, but we're speaking a little bit off air, just about, you know, the likes of MultiChoice then listing as that split off then happens from that.
Yes.
What are the prospects looking like for Naspers, particularly in the first, let's say, half of the year?
Look, you look at, you know, the space that they play in, you know, in the tech space, you know, competing with the likes of Netflix and the internet giants, Google, Microsoft. All of those businesses had very strong numbers, but you have to look at where the numbers are coming from. The big part, you know, big driver of the numbers recently, even for profitability for Amazon, which you know is not a very profitable company, is all coming from the cloud space. And Naspers, if you do know, they actually do have a big, you know, cloud business through their holding in Tencent, which is, you know, was one of the biggest anchors in terms of, you know, the numbers that we've seen from Tencent recently, because we're all worried about, you know, this is a gaming champion, but what's going to happen if, you know, gaming, you know, goes to zero, which is what has exactly happened with, you know, the delay of games in China. And the cloud just shot the hell up, and then we saw the ad business from, you know, the equivalent of a WhatsApp there, which is Weixin. All of that is coming to fruition now, and we're seeing that Tencent, or Naspers, if you want to call it now, it's a well-diversified tech business. It's not just based on one, you know, one-trick pony, basically. No, it's not.
Will be certainly an interesting one there. I wanted to chat just about the graph we saw a little bit earlier on in the last 10 months. At least at some stages, as much as 51% being lost there by Resilient, there or thereabouts. Now at around 63 Rand odd a share, it has fallen quite heavily of late, and things continue to just look bad for them. No resolution in sight.
Well, we basically, we're not surprised, to say the least. I mean, we've seen that report coming out from 361. This was ages ago, 50-something pages, basically outlining how, you know, they think, you know, the share price has been manipulated, and they never said anything about insider trading, which is what the regulator is also looking into. But the big problem today, or the news that's coming out today, is that you know, the regulator says we need another 6 months. It can only mean one thing. What are you looking for 6 months?
Exactly. Must be more.
That doesn't bode well for the shareholders of Resilient and those other companies, Lighthouse and Rock Castle. So
and that's hurt the share price, man.
The big problem for these guys is that they were the catalyst to, you know, the biggest property sell-off in South Africa. I mean, there were other problems like, you know, the economy not doing well. You know, there's been a lot of things basically going on there, but the biggest catalyst has to be, you know, the structure, whatever's happening there. It has cost 26% of, you know, returns, or losing of value by the whole thing.
120 billion rand lost in 2018 in that property sector.
Exactly.
Nepi Rock Castle was pretty much rocked. The likes of Lighthouse as well, also feeling
some
the pinch.
Some of them were down 66% for the year. So it's been, I mean, these companies have seen better days.
If this goes away, do they recover?
No, that's the sad thing. Everyone's skeptical now. Everyone is going to come into these companies, you know, with their eyes open. Plus, we're not exactly where we were last year in terms of the economy, or in these preceding years. I mean, we've seen really good days in property. There was a lot of listings. 2009, 2010, you know, property couldn't do no wrong. But at the end of the day, when you invest in these property companies, you know, they're income companies, you're not looking for a big, you know, surge in the actual value of the company. You're actually looking for the income that they produce. That's why, you know, they don't pay any taxes. They're very, you know, tax efficient, because all of those distributions that they pay are basically taxable on the hands of the shareholder. They're not taxable on the hands of the company. So that's the reason why you buy them. But they've had such a big, you know, surge in that value of those properties, which made no sense for us, because in the US, not the same thing was happening. It was marginal. It sort of trades like a bond, if you want it. So now it will trade normally again.
Okay. Quickly as well, just very quickly on that Rand story, 13 Rand 73 against that US dollar. A little bit of weakness coming through there. It was so resilient for a long time, excuse the pun on that front. It's sitting around 13.30, 13.26. Now it's just faltered a little bit there.
Yeah, it's, you know, it's indicating that the greenback is getting stronger, meaning they are winning the trade, you know, the trade war at this point. But we just have to wait and see what happens after this this whole negotiation that's happening. Very quickly as well on Eskom, your thoughts just on that front. I mean, it looks like the debt scenario is still not going to change at any point in time, despite the splitting up of the three, and now stage 4 of load shedding. Of course, well, those are just, the problems that are coming up overnight. The bigger problem is at NOMSA, which is, accounts for 1/5 of, the staff complement of Eskom has come out and said, oh, you're splitting in 3 ways. We're not going to work. Sorry, but so that's the big problem that they're facing currently there. And when the announcement that the company was going to be split in those 3 divisions, a lot of us expected that they'll be introducing private investors, which is what they didn't do. So how are you going to fix it if you're just breaking it up? You're supposed to break it up and inject some capital in it. So that second part hasn't happened, and until there is certainty on what's going on there, maybe we won't be talking about stage 4 load shedding and all those problems.
Certainly hope not. Yeah, that's certainly one. You don't expect that announcement on a Sunday afternoon. Right, Kumalo, from Vestact Asset Management there. Thank you so much for the time as well. Of course, unpacking that market picture. Yes, it is up 0.8% thus far today. It is a relatively positive picture, but very quickly, Moody's coming out as well, saying that even though South Africa decided to split struggling state-owned power company Eskom into 3, the move paves the way for a more transparent group with more clearly allocated revenue and costs between business segments. However, in and of itself, it does little to address Eskom's financial challenges. That is sentiment coming through from the only ratings agency that still holds us in some sort of positive light. But for me, that's where the buck stops. It's back to Nzinga.